Ontario just said Calgary is going to be one of the best real estate markets in 2026. PwC's report has ranked Calgary first among cities in 2026 outlook. Supply and population tailwinds over the past years have elevated home building and record in migration, supporting demand and absorption. CMHC data also shows strong national starts through 2025, with regional strength benefiting markets like Calgary. We also have a very strong business sentiment. Industry leaders expect the most resilient deal flow where policy and approvals are moving the fastest. Here are some of the major factors that they are stating why Calgary will be such a powerhouse. Purpose-built rental scale-ups. Developers are pivoting decisively from condos to rental, leveraging CMHC programs, municipal incentives, and financing structures. Rents have softened in some urban areas as supply arrives, but mid-market and family-sized unit remain scarce and in demand. Modular construction rises if financing and policy adapts. Prefabricated and modular methods are central to accelerating supply under initiatives like Build Canada Homes. New models like equipment and inventory finance, bulk procurement, first-time homebuyer programs, and streamlined codes are critical to scale beyond pilots. AI moves from pilot to performance. Firms are realizing measurable gains in leasing, pricing, maintenance, and security. Quebec's Law 25 has set a high bar for data governance, while agent AI emerges as the next frontier, compressing transaction timelines and demanding stronger privacy, resilient and emerging assets. Grocery-anchored and open-air retail continues to outperform. Senior housing and medical office gain momentum as demographics and policy measures shift care delivery. Self-storage benefits from densification. Industrial remains solid with a tilt to small bay assets. Data center opportunities persist where the power and land can be secured via partnerships. So what does this mean for 2026? For investors, Calgary screens as a top pick on growth and execution. In a gateway market, look for rental, student, and medical offices where demand is durable. For developers, prioritize rental pro formas and creative financing. Explore modular to compress timelines where local approvals and funding align. For policymakers, Calgary's combo of policy agility and supply delivery is a useful playbook. Enabling rental incentives and factory-built capacity can keep pipelines flowing. Signs of optimism and uncertainty. While distress-driven transactions, particularly those involving land and development assets, have meaningfully increased, deal activity is broadening beyond these constrained segments. Creative deal structures, new sources of capital, including private real estate investments, family offices, infrastructure funds, and private debt, are narrowing the gap between buyer and seller expectations. Investors are increasingly looking at beyond traditional asset classes, with private capital stepping in to fund emerging opportunities in student housing, medical offices, and other alternative sectors. This shift signals a market that's adapting to uncertainty with agility and innovation. At the same time, a notable trend is emerging around the value of land for condominium development in Toronto and Vancouver. In the current environment, this land has significantly been impaired. Its value has dropped sharply due to the collapse of the condo presale model, high carrying costs, and limited prospects for near-term project viability. As a result, owners of such land are facing tough decisions, including selling at a loss, high carrying costs, pivoting to alternative uses such as purpose-built rental, or seeking joint ventures with institutional or nonprofit partners. This dynamic is reshaping deal flow as well as capitalizing buyers and creative investors to look to acquire or repurpose distressed land assets, further contributing to the evolving landscape of real estate transactions in Canada. 2026 looks like a transition year. Calgary leads on fundamentals, while the national story shifts to purpose-built rentals, modular adaptation, and private capital stepping in where banks won't. If you're allocating capital or planning projects, align your playbook with those three themes. Looking across the country, Calgary stands out as a market of relative strength and resilience. The city has experienced record level of new home construction supported by strong population growth, more affordable land, and proactive municipal policies. Purpose-built rentals stock in Calgary has surged, and vacancy rates, while rising, remain manageable as the city continues to attract new residents and investments. There is a lot of evidence that definitely supports exactly what they're saying. We're noticing it now. Well, yes, we have seen the Calgary market softening. It is nothing compared to what's going on in those other major cities. Calgary is a leader in its processes and its building starts and creations. We're at the forefront of this. Lots of other municipalities will probably follow behind on some of the things that we are doing. So it'll be very interesting to see what the 2026 market will roll out and what it will look like, what type of trend are we going to stay on. But if other provinces have Calgary on their watch list, so should you. If you want to book a call with me and you want to figure out a plan for whatever it is you are doing, click the link in the bio. I would love to chat with you. Thank you for watching.